Hey guys, welcome to another Trade Genius podcast. Got my good friend Bob Kudla here. And guys, we're going to talk about why 2025 is the death of all real estate. Let's dive in.
Trade Genius.
Hey Bob, so before we dive into today's topic, we should touch on the markets. They've been pulling back quite aggressively. We've gotten a lot of questions on, is the top in, or, is this what we're calling for? Is it over? What do you think?
Yeah, so the top is in, but today was an unusual day because it's the last day you could sell for tax loss harvesting. So the market Friday had a big down, and then today had a big down, and we're already starting to see the relief rally. I'm looking over right now, and just watch MicroStrategy. It probably gives you the best indication, and it's bottom. So what I'm looking for, Phil, is tomorrow up, Thursday up, Friday up, even into Monday up potentially before we roll over week two, and then I think we're up again into the inauguration, and then we'll make those lower highs. But if I'm wrong on any of that stuff, we're going to let the algorithms tell us. But we caught this Friday, Monday down. Just remember, guys, Friday down, Monday down is a thing. Friday up, Monday up is a thing. Friday down, Monday down, Tuesday up is a very big thing. So that's what we're looking at. So don't short into this hole if you're a trader. Too late for you guys tonight. By the time you get this video, the market will be closed. So, but anyway, just wanted to let you guys know that. Now, Phil, to the topic du jour is that I know you put something up there about a week or so ago, and then this weekend a bunch of stuff has started to come out too. And also, I couldn't find the slide, but rents are already also starting to abate, and also the commercial lending to multifamily housing, the default rates are up big time. This is 2025. I didn't think real estate was going to do it again, but it's probably going to be it's going to be the death knell of the markets again and the banks sometime in 2025. I don't think there's any way around it. I don't think Powell can cut fast enough to abate anything, and just because there's just nobody can afford anything. So let's throw the slides up there, and you and I can go back and forth on these two. But this is the one I saw today. Unsold inventories are up across the board. So that's good news, if you're a buyer, but I wouldn't buy yet. I think you and I talked about this before. When people say, when would you buy real estate again? I said, probably the end of 2026. And I think I'm holding to that. Could we talk about our 100-week market sell-off, and that's coming because we're really close to that uninversion, which we should probably talk about again later this week, Phil. The second thing, house payments and media income. Guys, this is why nothing's going to happen that's good. Until this thing gets down into that blue color again, it's the affordability for people is awful, and we're going to go into a recession. A lot of people are not going to have jobs. Remember, this is the median income you need, but you have to have income to buy it. And then the last one is just another reflection on the affordability gap. And look at this. What's that number, Phil? I can't read it. 40% down?
49%.
Yeah, guys. Cut in half. It's ridiculous. I live out here in California, and I make good money. I still make good money. I have money in the bank. I couldn't afford my house. And I'm considered in the top 3% in the country, and I can't afford my house. So something's desperately wrong here. That number they share with me every day, to me, it's fictional. So I don't try to live on it. I don't plan on it. And I'm looking for California real estate tends to come down and test that prior top. So I think we're gonna probably push down pretty aggressively here before we get our next inflationary bump in California. So anyway, Phil, I threw that at you. Why don't you give me your thoughts on this? Do you agree, disagree? Any other thoughts?
Yeah, I think it plays into our overall view that we're topping out here across the board, and it's not just going to be one sector or one thing. It's going to be everything, right? All commodities, you name it. Now, commodities might fare a little better. Gold might fare a little better. Bitcoin's yet to be determined. I think you have previous cycles to see how that behaves when things are bearish, and it's usually pretty radical to the downside. I don't think anything's different. But in terms of like the housing market, you can roughly use the affordability gap as a measure of where things can go from highs to lows. So, a 50% pullback haircut in the housing market. If you tell people that right now, they'll laugh at you. They will absolutely laugh at you that there's no way. But it just, to me, going through very vividly remembering how 2007, 2008, 2009 went, it really feels identical to that. The attitudes are the same. The prices are stalling out. You're seeing housing price cuts for the first time. Actually seeing a few foreclosures too starting to creep up, which will become more of a thing as we progress through this next 2025 year. So I think very similar situation. And it comes quickly, like the prices reduce quickly. There's also lack of demand, and especially when the market starts, there's a general fear in the market. You will see people run for the hills. The last thing they're going to be thinking about is buying a home. Because why? Now it's obvious that there's a top in the market. They don't want to be buying into that. Now, reality is they should have been thinking about this about 6 months ago. And people are still buying this market right now, right? They haven't seen this. Is, again, there's a difference between having a speedometer and also having a radar detector letting you know there's a speed trap up ahead, right? So, and that's exactly what's going on. That's why we're telling you what's coming around the corner. And this all plays into being in a late business cycle. And again, you have to look at the macro data. We haven't had the macro data readings until now in these previous years that we've had. Even 2019, we were getting some signals, but nothing close to what we're seeing now with the way that unemployment is starting to tick back up. And those are big tells in the market, right? So I think it's just big macro late business cycle things. And this is, affordability gap. One thing you can look at these charts and realize is that we always mean revert, right? We always come back to affordable levels. Not going to be different this time. Will the Fed step in and do another round of QE 5 or 6, whatever number we're up to now? Absolutely, right? That's the new normal, but you're going to get a quick dip. So one thing I think people can make a mistake is that when it does dip, they think the dip's going to keep on dipping. But lately what's happened is you get the central bank coming in, slapping the training wheels back on the market, right? Because it can't balance itself. And so we may get a quick reversal from whatever correction that we get. So just be mindful that could happen. So otherwise, I think you would be looking at a very long economic malaise if left to its own devices. So that's kind of the scenario you have to keep in the back of your head as well as this pulls back. But Bob's right. If you've been priced out, it felt like you've been priced out of the market, then I think the next couple of years is going to help you out. And who knows, maybe the kids now, Gen Z, maybe they'll have an opportunity to actually get a home, because right now it's just completely out of reach.
Yeah, and a couple more things on that too is that, with demographics, there's a lot of very expensive homes that are going to come out on the market through estate sales. And so there's going to be a lot of pressure on the market here for the next couple of years. And the other thing too, the cautionary tale, we had Japan, but that's out of people's memory. But watch China now. China is absolutely imploding. 30% of their GDP is real estate. Some cities' apartments, they call their condos apartments, are down between 40 and 80% from their highs, and they can't find buyers. Okay. So it's an absolute bloodbath over there. And the reason being is demographics. And number two is unemployment. And look, and those people are stuck. They have very few investment choices because they can't move their money out of the country. So that's really giving them a hard time. And so you just have to really, really be careful. And look, the thing about real estate that I hate is that it's illiquid. And it's super liquid when the market's going down, unless you're willing to really take a pretty big haircut. And so just bear that in mind. That's my opinion. You can have your own opinion. There's a million different reasons why people like real estate. I'm just telling you why I don't, because I'm a trader. You can't really trade real estate unless it's going up. Okay. So with that, guys, tomorrow, Phil, for New Year's Eve, maybe we should talk a little bit about the pair trades and how to protect ourselves going into 2025. There's some really interesting ways in which you can go about doing it without a whole lot of alarm, and just so you can be kind of relaxed, because it's a really hard market to trade. Anybody that tells you that they could trade a bear markets easily, run away from them. It's very, very hard, very volatile, and you'll end up probably losing all your money, trying to follow some of these trades people are going to try to throw at you. But there's some ways in which you can do that to kind of smooth out the highway here a little bit. And we're going to share that with you guys tomorrow, hopefully. With that, Phil, thank you. Guys, last days to get your deals with us. And like I said, the prices are going up on Wednesday. And, basically the Thanksgiving and the Christmas specials that we run are also going away. So take advantage of them while we have them up. Talk to you later. And for everybody that's new, got a lot of new clients. Thank you very much. Hope to be worthy of your investment with us. Talk to you later. Thanks, Phil.
Bye.
Trade Genius.